When you're purchasing a home, you're going to need to complete a purchase contract with your realtor. But a lot of times, you're not going to understand exactly what you're looking at, and you may even be nervous to ask the necessary questions when it comes to the contract. So I'm going to focus on what I feel are the most important parts of the purchase contract, specifically in the state of Florida, so that you don't make any mistakes when buying a home. So first, you're going to have to look at the purchase price, the earnest money deposit, which is the money you give at the time that your offer is accepted on the property, your down payment, the loan amount, the closing date, the loan approval period, the type of loan that you're obtaining, the inspection period, who's paying for title, and the additional terms. And it's also important to know when you can or not cancel that contract and when your earnest money deposit is at risk. That's why it's so important to understand all of these sections. So let's first talk about the purchase price. The purchase price is the amount of money you've agreed to pay for the property. Pretty straightforward, but you need to make sure that on the contract, it's the number that you agreed to. You might have gone back and forth multiple times with the seller and your realtor before coming to a conclusion on what that price would be. So you need to make sure that the version of the contract that's being used and that you're signing has the correct purchase price listed. You also want to make sure that the earnest money deposit, which is a deposit you give at the time your offer is accepted, is the amount that you're comfortable giving and the amount you agreed to give. This is money that's going to be held by the title company or the title attorney that's handling the transaction and will be applied toward your total cost needed, so your total down payment or closing cost at the time of closing. But this money is also the money that becomes at risk if you don't meet the contingencies of your contract, and I'll get into more of that with you. You also want to look at your down payment. This is the amount you plan to put down in total. So if you're buying a home and you plan to put down 20%, it should show on the contract that your down payment is 20% of the purchase price. You want to make sure that matches. You don't want to show a 30% down payment if you're someone who's putting down 10%. You don't want to show a 5% down payment if you're putting down 20%, right? You want to make sure that whatever you're putting down matches what's showing on the contract. You also want to make sure the loan amount listed on the contract is the amount you're borrowing. So if you're planning to borrow $300,000, it should show that you're borrowing $300,000 on that contract. So let's look at the first page of the Florida contract. So we're going to look at those sections specifically that I mentioned. So for one, the purchase price right here. This figure on that line should be the amount that you agreed to pay and that the seller agreed to accept for the property. Below that is your initial deposit, also known as your earnest money deposit. That goes right on the line below the purchase price. This is money you're going to give to the title company to hold, typically within 3 days of your offer being accepted, and that money will stay with the title company all the way through closing, unless, of course, you cancel prior to the closing date within your contract period where you can get that money back. However, that money is held by the title company in an escrow account, and it's applied toward the total money that you need for the purchase. Now, below that would be any additional earnest money deposit that you might be given. In some cases, it may be split. You may give a portion of the earnest money deposit when your offer is accepted. You may decide you're going to give another portion of an earnest money deposit after your inspection period, right? It could vary, but whatever you agree to with the seller and the realtor is involved is what needs to show on the contract. So you want to check that and make sure it's accurate. The next line down is the financing or the loan amount. Now, it might list a percentage or it might list a dollar amount. Either way, you want to make sure it's the right amount. So if it's going to be 80% financing, then that line should show 80%. It shouldn't show something different. So it's very important to keep in mind. And then balance to close. So the balance to close is essentially your down payment minus the earnest money deposit. the best way to look at it, because you would subtract the purchase price, or you take the purchase price, you subtract your loan amount, you subtract your earnest money deposit, and what's left is your cash to close. But what that number is actually made up of is your down payment minus the earnest money deposit, right? So that's how you're going to check to make sure that the down payment amount listed is accurate on your contract. Now, you'll also want to look at the closing date. Like I said, you might have gone back and forth with the seller on of the property multiple times, and the closing date could change. Make sure that the closing date that's listed in the contract is the closing date that you agreed to. The loan approval period, extremely important. Contracts have a loan approval period. This used to be called the loan commitment period, but what it's referencing is the amount of time you have to obtain a loan approval from a lender, assuming you're getting financing on the property. Now, the contract gives you a set period of time of 30 days automatically, but if the line is filled in, it can be any number of days that were agreed to. So you have some cases where you're trying to be more aggressive and get your offer accepted. You might do a 7-day loan approval, could do a 15-day, so on and so forth. It could be longer than 30 days, right? Often not, but it could be. But that's important to look at, because that's one of your contingencies within your contract, is your loan approval period, right? Your earnest money deposit, as I had mentioned, is protected within your finance period, right? Your loan approval period. That means that if your loan gets turned down for maybe a low appraisal, or something happens and your income is different than what the lender might have calculated up front, and your loan is turned down and it's within that loan approval period, you can cancel and get your deposit back, the earnest money deposit, no questions asked. But once you go outside of that finance or loan approval period, even if your loan gets turned down, your deposit is no longer protected, right? So it's important to understand those dates and make sure it's what you agreed to and how important they are. I'll give you a perfect example, as a matter of fact. So, we have a client right now that we let them know, hey, you need to get your loan approval within this period. You need to make sure that you provide everything to us so that we can do our job properly to make sure that your deposit's protected. And unfortunately, she just didn't want to hear that. She wanted to move at her own pace. The problem is, she had agreed to terms in the contract that now she felt were too fast, but she had already signed off on those. And as we spoke to her and we pointed out, hey, you only had a 7-day loan approval period, and we need to meet that for you because you're going to potentially lose your deposit. She says that she never agreed to that. Well, the contract says otherwise, which is why I'm trying to say how important it is to look at these sections and make sure they're what you agreed to. Because maybe mentally, she truly believed she had a longer period of time, but the contract specifically states the 7 days in her case. So it's important. Just look at the loan approval period, look at your closing date. You also want to look at the type of loan that's listed there that you're actually getting, right? If you're getting a conventional mortgage, does it say you're getting a conventional mortgage, or does it say you're getting an FHA mortgage, right? If you're getting a jumbo loan, something that exceeds the conforming loan limits for the area, does it say that? Is it a fixed rate mortgage or an adjustable rate mortgage, right? So you want to make sure that the contract matches the type of financing you're truly obtaining. Now, you might need to change the financing at some point during the beginning stages of the contract period, right? You started to move forward with your lender. Maybe you were starting off as an FHA mortgage, your credit improved from when it was initially pulled to pre-approve you, and it makes more sense financially to go with a conventional mortgage now. So you can make that change, right? Can the loan time change? Yeah, you can, but you need to go back and do an addendum to the contract so that the seller and their realtor are aware of this change. Because technically you're changing the terms of the contract when you change the type of financing that you're obtaining from what was originally listed in the contract. So make sure that what's listed there is accurate. If it needs to change because it's going to benefit you to make that change, we'll make sure that it's brought to everyone's attention. So within the contract I was mentioning, you want to check your closing date. So you're going to see that, and it's going to be filled in right here on this line. Closing date. Whatever date is listed there is not a suggestion of when you should close. It is the day you're closing. If you need to extend that, you need to let everyone know far enough in advance where the realtors can prepare an addendum to the contract extending the closing date. If you need to move that closing date up, you don't need an addendum agreeing to that, but you do want to get everyone to agree in writing that the closing date has now moved up. However, that whatever date is listed in that date field of the contract is your closing date. I just want to be clear on that. Sometimes, buyers think it's just a suggestion of when the closing should be. It's actually the closing date. That is your closing date. We talked about the financing period, right? So the type of financing, the financing period. So if you want to make sure box B right here is checked, right? Box B means that you're getting financing on the property. And this is the box I'm talking about, finance period, right? So if it's left blank, you have 30 days, as it says here. However, if it's filled in, whatever amount of days is listed there, that's how long you have to get a loan approval. Now, not the full clear, what we call on the lender side, a clear to close, right? You might still have some contingencies to close, but you need to have it through underwriting, and you want the appraisal to be in because the appraisal is part of this approval period, right? Unless you have some sort of addendum to the contract for the appraisal specifically stating that you're only buying the home if it appraises for the contract price, for example. If you don't have that and it appraises low after your finance period, you're not protected by your finance period from a low appraisal, right? So you're having to proceed forward with the purchase of that property and covering the difference in that case, right? So if you feel more comfortable adding some sort of addendum stating that you won't pay above appraised value, your realtor can add that, but that's something you need to do up front. Everything I'm talking about needs to be done at the time that you're negotiating the terms of the contract with the seller. You're not going to go back 2 weeks into the contract and start trying to change these things. I'm not saying that doesn't happen or can't happen, but the proper way to go about it is to negotiate all of these things up front so that you're not making constant changes during the process. Now, let's talk about some other important sections. Title. So title is going to show ownership of the property, and title's going to exchange hands from the seller to you. In the contract, it's going to indicate who's responsible for paying for that because there's a cost involved with the transfer of title and the preparation of the title work and the closing itself. So in Florida, as an example, any county, Palm Beach or north, the seller actually selects the title company and pays for the title insurance. This can be thousands of dollars depending on the purchase price. Any county, Broward or south, the buyer picks the title company and pays for the title insurance. And this includes going out west. So you can go out to the west coast of Florida. As long as you're even with Broward or south of Broward, going out west, it falls under that. If you're north of Broward and going out west, it follows the guidance above of seller selecting. But that will be listed in your contract. So it doesn't mean that if you're buying in Broward, you can't have the seller select title and pay for it. You can negotiate that into the contract. However, there's a section of the contract which I'll show you that will specify who's doing that, right? The inspection period. So the inspection period is going to be the amount of time you have to have a home inspector, or if you want to self-inspect it, by all means, you can do that. I don't recommend it, but you have an inspector come out to the home. They're going to look for deficiencies with the property, right? Think underlying issues in most cases. We're not talking peeling paint or a chipped tile, which they'll point those things out, but that's not really what they're being utilized for. They're being utilized for bigger issues. Are there issues with the electrical system, the roof, the AC, right? The big ticket items that you want to be able to go back to a seller on prior to this period expiring, right? Typically 7 to 10 days. And you want to present these things or have your realtor present these things to the seller and their realtor as items that are of a concern to you and what you're looking for in return. You might be saying that you want those things repaired. You might be saying that you want a credit of whatever dollar amount to go toward repairing those, which you would in turn actually use toward your closing costs, freeing up cash for you to make the repairs yourself post-closing. But whatever it might be, you need to make sure that the inspection period listed in your contract is the one you agreed to with the seller and with your realtor. And the last thing you want to look at are the additional terms. So there's a section in the contract that's additional terms. It's essentially a bunch of blank lines. In the additional terms section is where you can list things like making sure the seller pays off any liens that they might have on the property. Maybe they're attached to the taxes, right? Right now, there are a lot of people that have solar panels on their home, and they might have taken out a PACE loan, which is a loan that actually attaches to the property tax bill of the property and is paid out as part of the taxes every single year. But that's a loan. And technically, that loan should be paid off by the seller of the property when you're buying the property, unless, of course, they're not giving value to the solar panels in this instance when determining the sale price of the home. But if you're paying for that item in the sale price of the home, there's no reason to pay for it in your taxes as well. That seller should be paying it off at the time of closing. So the point being, in the additional terms section of the contract, the realtor needs to list seller to pay off PACE loan at closing. You can also list things like seller to give buyer 3% of the purchase price toward their closing costs at the time of closing. And if you're interested in learning how to get a seller to pay for your closing costs, check out my video on closing costs and seller credits. But that's something that you want to look at in these additional terms, because if you agree to those things up front, you want to make sure that they're listed there. Everything needs to be in writing. So I was saying who pays for the title. So I mentioned that that's going to show in the contract itself, right? So it's right here, right? So you have seller shall designate closing agent pay for the policy. Buyer shall designate closing agent pay for the policy. So if this top box is checked, that means the seller's paying for the title insurance. If this box is checked, it means you as the buyer are paying for the title insurance. So it's actually cheaper from a closing cost perspective to buy a home Palm Beach County North than it is to buy a home in Broward County South, right? Another thing you want to look at are any sort of assessments that might be on the property. Now, this is most common with condominiums. There might be an assessment, money being collected by the association to make up for a shortage in reserves or some sort of repairs they might be making to the building itself. Who's paying for those assessments, right? So in most cases, the seller pays for the assessments due up until the time of closing, and buyer pays from the point of closing forward, right? It could be a 4-year assessment payout. You want to make sure to read that, and you want to make sure that you negotiate whatever it might be into your contract, and that whatever's listed here is what was agreed to by all parties. Inspection period, as I had mentioned, right here. You're automatically given 15 days, but in just about any market, it's extremely rare to see a seller accept a 15-day inspection period. More common is 7 to 10 days, but you want to make sure that whatever number's listed on the line that I just pointed to is the number of days that you agree to. And you need to have that doesn't mean you have to have an inspector out there by the 7th day. It means you have to have the inspection back and have the results of the inspection and have those presented to the seller within that period of time. That's very important to know, right? So you can't wait until day 7, then have an inspection done, and then think on, if it was a 7-day inspection period, and think on day 8 or 9, you're now going to present this to the selling side and you have any weight behind that. You need to have it in, presented, and some sort of terms agreed upon within your inspection period. So it's very, very important that whatever date's there is the date that you agreed to. Now, when can you cancel the contract? And more importantly, cancel it and get your earnest money deposit back, right? We talked about your earnest money deposit being the money you give up front to be held by the title company, essentially in good faith that you're going to proceed and purchase the property, right? But that money becomes at risk, as I mentioned, if you go past your contingencies within your contract. So when can you cancel and get that money back? Well, the most common times to cancel safely and get your money back is during the inspection contingency, inspection period, right? I just mentioned that. Let's just call it 7 days. If you can cancel within that 7-day period, really for any reason, and get your deposit back. Oh, I don't like that, there's discoloration on the ceiling in the house. I don't want to buy this house anymore. Canceled. Get your deposit back, right? Appraisal contingency, as I mentioned, you can add an appraisal contingency to the contract if you want. You can have it based on the home appraising for a certain amount. I'm willing to pay up to, let's say the contract price is $400,000. I'm willing to pay up to $400,000 for the property. If it doesn't appraise for $400,000, I get to cancel the contract. Even if you've already passed your inspection period, and even if you've already passed your finance period, right? You'd be protected with an appraisal contingency. You can have a sale of current home contingency. Maybe you already own a property, but the only way you qualify to buy the property you're going under contract for is with your other property selling, right? So there's an addendum your realtor can put in the contract that makes the new purchase contingent on the sale of your existing home. It would typically, list whether or not your home is already on the market or already under contract. It will give a date that it needs to be sold by, right? Because it's not going to be open-ended in most cases. But you can put that protection in the contract because that happens often, right? You need to sell a property to free up the money that's needed for the down payment on the new property. That's common. So if you're not comfortable, going under contract without having a contingency protecting you, stating that your property does need to sell, make sure that you talk to your realtor about adding an addendum to the contract specific to that. Now, once you've passed all of your time periods and you've met all your contingencies of your contract, your deposit is pretty much no longer protected. So you can still cancel, of course. No one's making you buy a house that you might decide you no longer want. But you need to understand that any earnest money deposit that you've given is now at risk, right? That's the most important thing to know. And that's why it's so important to understand all the details of the contract, make sure all the dates are accurate, make sure the terms are what you agreed to in the first place. Because once you pass those time periods, there's almost no going back when it comes to the money. So if you felt that the information in this video was helpful, please comment below. I reply to all of them, and subscribe for more videos just like this one.